Good morning, everyone. Thank you for joining us today, and welcome to this educational presentation of just launched our new strategy number 9. Now, this is a brand new method that we have just starting out the first of the year in January, just last month, and it's already producing some really nice setups and some nice pullback signals. We've gotten reports from some of the students who have already become members of strategy number 9 that they're doing very well and some really nice trades. Myself included, I am presently trading this intraday on the Emini futures. But this is a great pullback method, and I'll go into detail exactly what a pullback is if you're not familiar with it. But as you can see here, just a few weeks ago, this was an actual setup that was generated in LGND, where someone would have thought we're going higher. This generated a sell signal, and we can see that the stock really fell out of bed. Now, the beauty of this method is that it can be traded in any market, any time frame, and both up and down markets. And as well, you can see here that we can use it as a directional tool for the markets themselves. Here's a snapshot going back to last year, the summer of 2018 in the S&P index. As you can see here, we had some really nice signals that were generated as the market was going up. But even when the market was going down, look at these two really nice sell signals that were generated. So we're inviting you to be some of the first to trade our new method. This is strategy number 9. Trade it along with me. I've been paper trading this for roughly about 6 months, and I just recently started trading it about 2 or 3 months ago. But we really feel confident that this can make you a consistent trader. And you can also apply it on our new platform, the PTS Primo charting platform. This is the educational portal that teaches you how to trade in both up and down markets. So this promises to be a really nice and educational presentation this morning. So welcome once again. Thanks for taking time out of your Saturday morning. My name is Steven Primo. I'm the president and founder of Specialist Trading. And if you're new to my webinars, if you haven't attended any of our series of presentations, you'll find out very shortly that we're all about educating you. We're a little bit different from other webinars in that that's our only goal. We're not here to say we have a system or some type of method that no one has ever used before and that it generates thousands and thousands of percent. In fact, we don't believe in any of that. We're strictly trying to educate you. That's all we're trying to do so that you can make your own decisions. We're not a systematic company. We don't keep any type of statistics or records, because I personally have traded systems, and in fact, I've even taught them. Going back about 10 or 20 years, I was the educator at a website where I was teaching their particular systems, and everything performed great when the conditions were meeting the requirements of the system. So we went back and tested them, and they worked great for roughly about 10, 20 years, but then when the market changed, all of those systems, everyone that I was trading blew up. They lost all of their money. So that's why we don't believe in systematic trading, because we know when the market changes environments, you have to change your environment. You have to edit and alter things with the trading plan. That's why we only teach and trade strategies which allow you to have that input, that insight that comes from trading and from becoming a part of the process. So this is why we stress education so much. I've been trading for 42 years now, and if there's one thing I've learned, it's that the majority of traders fail because they've taken themselves out of the game. You're relying on someone or something to tell you how to trade. I mean, think of it. How do you make your own trading decisions? I know a lot of you will answer and say, well, Steve, I make my own trading decisions. I decide what I want to buy or sell. But really go into detail and really research your analysis. Is it based on what someone said or what someone is telling you? Is it based on what the institutions are doing or based off of some economic report? You see, those are all outside sources. They're not the real thing at which you're trading. And what you're trading is just simply the chart in front of you. So what we try to do is educate you so that you can learn to listen to the chart in front of you. You won't have to listen to anything else. Trading will become a lot simpler and a lot less expensive as well. And for the first time, you'll be in charge of your own trading destiny. This is our goal at Specialist Trading. And so I'm going to share with you a great method that I'd love to teach you and trade alongside with you today. But before we begin, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying strategy number 9. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples I'm about to share with you are strictly for educational purposes only. Now, I know a great many of you have already joined us on Twitter, but if you haven't, I'd like to invite each and every one of you to follow us. On Twitter, I post different information on a daily basis. I show a lot of examples of techniques and methods that we teach in our courses. I also show, excuse me, some little bits of financial wisdom to help you with your trading. So lots of great free information. You might want to copy down our handle there at SPCLSTTRADG. Lots of great free information. Feel free to follow us on Twitter. Now, as I stated in the opening statements, we are different from other webinars you probably attended in the fact that we only want to educate you. That's all we want to do. In fact, I often say I've teamed up with Pro Trader Strategies, and when we have our meetings, I often say, you know what we really are is more like a buffet line of trading. What we do is we provide you with a basic course, and then you can go up to the buffet line and you choose your appetizers, your dessert, your drink, and that's the same thing what we do with trading. We give you a basic entree, which is our actual strategy, our basic generic format. But then we give you this buffet line of different ways to exit, different ways to enter, different ways to place your stop placement. And that's the beauty of this. This allows you to pick and choose what you feel comfortable with. So it's not a system where everyone buys and sells at the same price, everyone exits at the same price, and that's why we can in no way guarantee that anything is going to generate certain statistics, because we encourage everyone to trade differently. Someone may take a trade strategy number 9 and make 2 points and say, boy, that was a nice quick trade. Someone can stay in longer, say, I want to use a different exit level and maybe hold out for 10 points. Someone else could say, you know what, I was really conservative in this and I moved my stop to a place to break even and I just broke even on the trade. So everyone's going to come up with different results, and that's good. That's what we want, because we want you to be in charge. That, in my opinion, in 42 years of trading is the only way one becomes consistent. Not by listening to anyone else, but by becoming consistent. So where traders say, well, Steve, I don't know how to make my own decisions, this is where Specialist Trading and Pro Trader Strategies come in. We provide you with all that information and education so that you can make your own decisions. As you see here, my goal is not to force feed you signals. It's not to tell you what to buy or sell. It's not to tell you the perfect time frame. My goal is simply to teach you how to trade with a specialist edge. When I was struggling some 42 years ago, my mentors taught me the same edge, and hopefully it will be able to sustain you going on for 10, 20, 30, even 40 years. Okay, with that said, once again, we are an educational company, so I want to take all your questions, but if you're new to my webinars, we like to take the questions at the end. I know a lot of you go to presentations, and every time there's a question you ask, and they stop the presentation, and we answer it. That will keep us here far too long. We'll be answering questions way into the afternoon. I don't want to take up your entire day. So kindly wait till the end to ask any questions. I promise I'll get to each and every one of them at that time. This won't be a real long presentation, so don't worry. Now, also, the only question I actually will answer is this being recorded? Yes, it is. We record all of our webinars, so if you have to leave early or if you're having technical issues, many times it's just your internet connection. You can log off and then log back on again. But if you're still having difficulty, we send everyone a link to this presentation. So don't worry, you can watch it at your own leisure later on today or during the week if you'd like. Okay? All right, so with that stated, let us begin this presentation. We are going to be talking about strategy number 9, a brand new strategy, and let me share with you some of the highlights of this particular method. And when I say highlights, I'm sorry, I cannot share the rules with you. I know a lot of you, when I gave this presentation about a month ago, said, Steve, this is great, but I mean, can I get some of the rules? Because, let me know exactly how to trade this. Well, first of all, that wouldn't be fair to the people that purchased the course. But secondly, I know in other presentations I've given 1 or 2 rules of the actual strategy, but this method is the simplest method I've traded in 4 decades. It only has 2 rules. And so if I gave you both the rules, well, then you pretty much have figured out how to trade this. It's more of the insight in applying it and knowing what to look for the good setups as opposed to the setups that are just okay. So that's what we teach in the course, and we teach you how to really trade this and how to actually use all the different variables for exits and entries. Excuse me. But as I stated, this is a brand new strategy. I just recently started trading it within the last 3 months. It's a proprietary pullback method. If you're not familiar with pullback means, don't worry, I'm going to go into detail in just a few minutes. The beauty of strategy number 9 is you can apply it to any market, any time frame, and any direction. I currently am trading it on tick charts in the E-mini. We have people trading it in the forex markets. We also have students trading it on commodities. We also have students trading obviously in stocks, all in different time frames, different directions. Now, the focus today will be mainly on stocks because most of our members trade stocks, but trust me, you can trade it in all those different markets or time frames. Now, we have an aggressive or more advanced version, which I teach in the course. So there are 2 basic versions. They run off the same concept, but they're a little bit different in one that the second, which is the most aggressive version, actually allows you to apply options because we're looking for these deep pullbacks, meaning that where before you would purchase at point A, well, this allows you, the aggressive version, to purchase at a much lower level based on the rules. So if you're purchasing at a lower level, well, then obviously you have greater potential for a profit. And because of that, we allow our students to trade options. I mean, you're always allowed to trade anything you want. Remember, it's your decision, but you have more potential for capturing profit with options. We know now that with some of our strategies, they don't work as well with options because even though the profit potential is good if you purchase or sell the actual stock or future or commodity, for the option purchaser, it may not work out as well because of the time decay and because of the price of the actual option itself. But here, it has seemed to work out fairly well, and we actually have some members who do trade options with it. Now, I'm going to share with you some of the recent results of strategy number 9, but remember, if you decide to become a student of mine and become a member of Strategy 9 course, we always require that everyone paper trades first. As I stated, I paper traded Strategy 9 for almost 4 months now before I started actually using real capital. So we always want you to paper trade because that's a part of the process in terms of learning. Remember, there is no endeavor, there's no career, there's no hobby where you don't have some type of practice session first. Think of an athlete. He just doesn't start playing. There's always a practice session. There's always, the preseason. Think of an actor. He never just jumps into a movie or a play. There's always some rehearsal. There's always some time where you get together and go over what you're going to be doing. It's the same in trading. You don't just say, oh, wow, I watched the rules to this course. I'm going to start trading this Monday. It doesn't work that way. We want you to paper trade first so that you can really understand the process. Even though it's extremely simple, there's so much more you can learn from paper trading. Our edge here is consistency. So what does that mean? Does that mean like, well, every trade's a winner? No, it means that opposite, actually, that you will have losses. And that's okay. Don't ever let anyone tell you that this plan never loses or we've lost once in the last 10 years because most likely they've form-fitted the numbers and to make it look perfect, everything loses. That's just like saying, well, it never, I never miss a basket when I shoot baskets, or I never strike out when I play baseball. I mean, that's silly. The best of athletes do. So it's perfectly normal. What you want is a pattern where you have a nice upward slope in your P&L. 2 steps forward, 1 step back is what we always say. That's what consistency means. Having a trading plan that is okay and acknowledges the losses that will happen every once in a while, but is confident in knowing that you'll be able to recoup those losses and go even higher on the next trade. That's what we're looking for, okay? So let's talk about strategy number 9. It employs 2 simple indicators. I'll share one with you in just a few minutes, all right? Their relationship to the price automatically produces and generates the signals. And that's it. That's really what it's based on. Now, I can't really go into detail, but it's that simple. It's the relationship to the price that is important. So that's what we really teach in the course. It's not so much the 2 indicators, but if I gave you these 2 indicators, most likely you'd figure it out. Now, in an overall uptrend, the buy signals will be generated during a decline. So this is different from other strategies we have where we may be looking for an uptrend, a kind of a pause, and then we go higher. What we're looking for is an uptrend and then a sell-off in that uptrend. A lot of traders think, well, we're having a sell-off, so that means the uptrend is over. But pullback traders look for a sell-off because they're assuming that that sell-off is going to stop and then the uptrend will resume. So we're looking to buy at lower prices. Now, reversely, we're looking to sell at higher prices. So in an overall downtrend, sell signals will be generated during a rally. So when people will be looking at a downtrend and all of a sudden we start to bounce, they'll say, hey, it's over. It's time to buy. We hit a bottom. That's where all the support is. And the institutions are buying, so I got to buy. We don't listen to those outside sources. Remember, we're only listening to the chart in front of us. And if the rules and requirements line up, this is not the bottom of a downtrend. This is simply a bounce in an overall downtrend, and we should be looking to sell. This is what pullback trading is, and this is the basis. This is the core to this particular strategy. Now remember, once again, as I stated earlier, I know we have a crowd here today. Please ask the questions at the very end. I will answer only the questions at the end, and I promise I'll go over each and every one of them, but we're just going to go through the presentation now. All right, so let's give you a little brief refresher course to what pullback trading is. Here is a generic setup for a pullback buy when you want to buy. As you see here with the green up arrow, in a pullback buy, we're looking for an overall uptrend. But very rarely do things go straight up. Sure, every once in a while you'll see something go straight up. Remember Bitcoin last year, it was going straight up. But very rarely do things happen that way. They have this kind of a stair-step bracket approach. So when the market is going up, usually it will stall and hit this type of a bracket here. This is where people will think, well, maybe we've topped out, or there's the resistance, and this is where the institutions are selling. This is a Fibonacci resistance point. All these terms to make you overthink and overcomplicate your trading. If the requirements line up, this is simply a pause to the downside in an overall uptrend. And what usually happens is once the pause is over, it breaks out and goes back up higher. Well, rather than trying to buy it on the way up as it breaks out, what a pullback trade is, we want to buy somewhere here on that sell-off. Now, it's not that simple, because many times, you'll buy and it'll go lower and lower, and it actually was the end of an uptrend. But because of our money management, which you teach in the course, because we know that not all trades are going to be perfect, and because of your stop placement, you'll be able to define and have that consistency in your trading. Now, on a pullback sell, it's the same thing. We just turn it upside down. You have an overall downtrend, but we know that very rarely do things go straight down. All right, sure, in a panic market or a crash, they do, but most of the time, they'll go down and then they'll pause, they'll bounce a little bit, and then go into this bracket phase. Rather than thinking that we've bottomed out, if all the requirements are met, well, we usually head lower and the trend resumes lower. So rather than trying to sell it on the way down, which is fine, that's just another style of trading, pullback traders like to sell on that bounce. So we're looking for that bounce to go short. People like to trade pullbacks because it's the psychological feeling that you're buying lower and selling higher. We don't feel comfortable buying higher and selling higher, or selling lower and then covering lower. That's still a perfectly admissible way to trade, but a lot of people have issues with that. They just can't say to themselves, this is the high of a stock and I'm buying here. It doesn't make sense to me. Even though they'll see later on that it goes higher, it's just very difficult for them to do. They feel more comfortable knowing that they're selling at a higher level than the stock or future was maybe a month ago, and they are buying at a lower level than maybe where the currency pair or the commodity was a month ago. This is psychologically more beneficial to some traders, and that's fine. The main thing is you have to decide for yourself. Remember, we're not a systematic company. We're letting you be in charge. You decide if you're a pullback trader or a continuation trader. It's been my experience that most people tend to prefer to be a pullback trader. All right, so let's look at some recent examples. And some of these examples will be a few months, maybe 3 or 4 months back. I'm going to share with you also some examples that happened just a few weeks ago, okay? Remember, I cannot give you the rules. I know that'll probably be the most prominent question at the very end. Well, Steve, where do I get in? Where do I exit? Where do I place my stop? What's the statistical, profit ratio of this? Remember, those are things, first of all, we don't keep any records because everyone trades differently. We can't keep statistics on our students around the world in over 115 countries or in every state in the United States. That would be silly because everyone trades and is encouraged to trade differently. That's the only way you become consistent, not by trading a system, okay? The only number that we do keep, the only statistic that we do keep is the one that never changes, and that's that 85% of all traders ultimately fail. That is one statistic that has not changed since I started trading, all right? So that's the only statistic you should ever think about and should ever be concerned with. 80 to 85% of all traders will ultimately fail. And by failing, we mean giving away all your money. So that's the statistic that is the most prominent one. And you start to think, well, why does that happen? Well, think of it. What is the industry based on? It's based on you buying a system that tells you where to buy, tells you where to sell, or based on you going to a chat room or a trading room where someone tells you what to buy, what to sell, what the perfect time frame is. This industry is based on taking you out of the game. That's where we're different in Pro Trader Strategies and Specialist Trading. We want to put you in the game by making your own decisions. So the only statistic you should ever concern yourself with is that 80 to 85% loss statistic, okay? All right, so let's look at some recent examples here. Here's Costco, okay? This is going back to December of last year. Someone looking at this would say, well, gosh, there's no clear-cut trend, right? I mean, how do I know what this thing's going to do? It's basically in a range. Well, here is the first indicator. It's the 50-period simple moving average, okay? That's one of the indicators I'll tell you. And that's something that is no secret. If you've attended my presentations before, you'll know that this is the most prominent and powerful tool that we use. It's called our buy-sell line, and it defines whether we're going to be buying or selling. If price is below the 50, we're only going to be a seller. If price is above, we're only going to be a buyer. I know it sounds too simple, but go back and apply this to your last 10 or 20 trades. All right, I can almost guarantee you that you had losses because you were selling above the 50 and you were buying below. And over time, you'll have losses because you're out of sync with the overall trend. Now, in this case, there's not really clear-cut idea as to what we're going to do because we're actually oscillating below and above the 50. So someone would say, well, Steve, how do I know which direction? We're above, we're below, we're back above again. What are we thinking? Well, I understand, but because this strategy is so simple, we just need to look back at the last 2 or 3 bars. And for the last 2 to 4 bars, we closed below. So that's all we need to tell us, along with the relationship of price to the other tool, that we actually have a sell signal generated here. Okay? So using the many different variables for entry, the many different variables for exiting, the many different variables for stop, you would enter this trade, but decide how you want to enter, how you want to get out, how you want to protect yourself. But I think most traders would have had a nice profit because once you entered into the trade, look what happened in just the next week or so. 37 points potentially you could have captured. Now, obviously, there was some news that caused this stock to gap down in mid-December, okay, a couple of months ago. We had no idea what that was because this strategy is not based off any news. We don't look at any news. You can if you want to. It's not required. But someone would say, well, how did you know to short that? There was no clear-cut, indication. Well, yes, there was. According to strategy number 9, it spotted that this wanted to go lower, okay? Let's look at PG, all right? Now, this isn't a real strong setup, but obviously we've been going higher. Most traders would say, well, Steve, look at this doji, all right? This is a topping formation, so we've most likely hit the top here. We're probably going to come all the way back down. Well, not according to strategy number 9. According to strategy number 9, where is price in relation to the 50? Price is above. So what's that telling us? The overall trend is up. We never sell above the 50 if we're using the standard format. We're only going to be a buyer. So as we look here, strategy number 9 generated a buy signal. And in the following weeks, you had a nice small profit of 5 points. But at least you knew not to sell this, okay? Here's another example in Facebook. We all know that Facebook was acting terribly coming into the end of the year. They had some terrible news last year. The stock gapped down tremendously and was in a real strong downward trend. A lot of people actually lost money not by owning Facebook prior to that news, but actually by buying it because they thought, well, this is so oversold. It's got to bounce, right? That chat room I go to says, Facebook has never been this low, and the indicators or the institutions or the support and resistance line are telling me that I got to buy this. Well, if you had bought this, you would have lost a lot of money because waiting for this thing to bounce. Now, it has bounced since then, but most likely you would have given up by that time and already taken your loss, okay? But if you would simply use the 50-period moving average, look where price has been this entire time coming into the end of last year, where we're below. So there's no reason you would want to buy this. If you had bought Facebook on these little small sell-offs, well, sure, you could have had some profit, not very large, but small, but you would have been very quick, 2 or 3 days and then lower. Maybe a week and then lower. Another 2 or 3 days lower. One day up and then lower. So see, it's not worth it to trade that way. It's like swimming upstream. Sure, you'll be able to do it, but it's very difficult and you're very exhausted. And many times you're saying, why am I working so hard to travel such a small space? It's the same way with trading. Why am I working so hard to make such little money? It's because you're swimming upstream. You're not you're going against the trend. If you're with the trend, if you're in sync with the 50-period simple moving average, it's much easier to be a seller. And look at all of the strategy number 9 sell signals that were generated here. All the way when we had these little bounces, strategy number 9 was generating sell signals, telling you and giving you these great opportunities in which to sell. Now here's an example of what we mean by consistency. We've had 3 or 5 great trades here. And now let's say you start using this method and right here you sell and you have a couple of good days, but then quickly go back higher. Now at this point, you're probably stopped out with a small loss, but you're saying to yourself, this stuff doesn't work. All right. How come I get in and I have a loss? All right. It went down for 1 or 2 days and then that's it. Well, this is what we mean by consistency. You can't just sit there and play the victim card the way a lot of traders like to do. They always want to blame someone else. Remember, you're in charge. You're making your own decisions. You don't even have to take that trade or not if you don't want to. But if you had taken it, you have to be vigilant because there's always setups being generated. Now, another setup was generated right here. Had you taken that, you would have made back most likely what you had lost and may have made back even more. Now, if you had just taken that very first signal in August, potentially you could have captured 58 points to the downside. So this is what we mean by being in sync with the overall trend, by swimming with the current at your back, and then by selling on these little bounces. That's the epitome of pullback trading. Here's an example in Yelp. Once again, someone looking at this will say, wow, okay, I have no idea. We're in a solid range here. And the chat room I go to says we shouldn't be touching this because the earnings are going to be bad. All right. Once again, probably 99.9% of traders make their decisions this way. At Specialist Trading, we never tell you how to trade. We just say that way of trading shows no consistency. It's not required here. We just teach you how to listen to the market. And what's the first thing the market's telling you? It's telling you it's above the 50-period moving average. So there's no reason you'd want to sell this. You're only going to look at this from a buyer's point of view. But does that mean you just simply buy at the market? No, you have to have some structure. That comes in the form of strategy number 9. And there was a buy signal generated right here for a small little profit. Let's say you had taken your quick profit and gotten out. Or let's say you had held on and at this point you're really not making any money. That's okay because another signal was generated here. Now you could have just seen this second signal enough to give you confidence to stay in the trade, or you could have purchased some more because that one took off and potentially you could have captured 8 points coming into October. Here's an example in NOC. Most traders would look at this and say, gosh, Steve, this is a great buy signal, okay? And I'd say, well, why would you think this is a buy signal? And they say, well, they had some support here. The $10,000 course I took said the institutions were buying here. And then when we broke down and came back up, that was a non-confirmation, okay? I saw this in the volume and in the special indicators I looked at. And so we didn't confirm this breakdown. It was a fake out breakout to the downside. And now we've gone much higher, all right? The volume has picked up. The earnings are supposed to come out. I think the institutions are buying it in advance of the earnings. And on top of that, this guy on TV I watch after the close every day really likes this stock. So I'm going to buy some, or I've already bought some, and I'm really excited about it. I'm going to hold on for the long term, okay? Trust me, this is the way I even traded 42 years ago because these are the things I had been taught that are supposed to work. The one common denominator in all of my justification is that I did not have any input. It was all coming from someone or something else telling me what this stock was going to be doing. What we teach you in our courses is for you to be in charge. And most students will say, well, I don't know how to be in charge. I've never been taught that. That's what we do. That's the gap we fill. We teach you all the different variables that I have learned in 4 decades that have shown consistency over time and allow you to make your decision. Now, the first thing we teach you is what the overall trend is. And how do you do that? You apply the 50-period moving average. So if price is above, the overall trend is up. If price is below, the overall trend is down. We never want to be buying if the overall trend is down. So I don't care what some institution is doing. I don't care what some guru is saying on TV. I don't care what somebody's saying in a webinar. I'm just listening to the market. And what is the market telling me? It's telling me that this is a bounce in an overall downtrend. And what does that mean? That means that this is a perfect pullback scenario. Now, does it guarantee it's going to work? No, there's no guarantees in trading, but you have a high probability setup here. And according to the rules and requirements of strategy number 9, well, guess what? It generated a sell signal. So you have a choice here to take this. It's not a system. You do not have to take every trade. You have a choice as to how you want to enter. We give you, I believe, 6 or 7 different variables for entry. You have a choice where do you want to place your stop. You have a choice if you want to buy the puts or actually short the stop. And you have a choice where you want to exit with a profit. You want to get out with a 1-point gain? Do you want to get out with a 10-point? It's entirely up to you. But let's see what happened. Well, in the next 2 weeks, 42 points to the downside. What happened to all the institutions buying this? What happened to the good earnings supposedly supposed to be coming out that still haven't come out yet? What happened to the support and resistance? What happened to the volume? What happened to that trading guru that knows everything? Remember, once you get rid of what my mentors called useless noise, because I used to listen to these things too. Once you get rid of the useless noise, that's when you start to become consistent by focusing on one thing, the chart in front of you. Here's Apple, okay? This is an older chart of Apple. I'll show you a more recent one that happened just last month. But here's an older chart of Apple in September. Once again, the same scenario where it looks like we're just in a range. We apply the 50-period moving average, and though we may look like we're in a range, the market has an overall upward bias. So that means we want to have an overall upward bias. But it doesn't mean we can simply buy at the market. We have to apply structure. Our structure is in the form of strategy number 9. It generated a buy signal right here, and the stock went up 15 points in 2 weeks coming into October. Now, here's the chart I had originally showed you in the S&P index. You know, when the markets are going up, everyone's a genius. I remember in last year in the summer, spring and going into summer, everyone was a genius telling me, Steve, I don't need to take your courses. Everything I trade, I make money on. It's really simple. And I like to go to this chat room and this trading room where they give their advice. And they've been pretty good. And I've made some really nice trades lately. So, why do I need to take your courses? Because their information is really helping me. As I stated, it's very easy to make money in uptrends. Psychologically, it's easy because it just fits our persona. We like to buy, and when things go up, then we exit and then we buy again. It's very easy. And as you can see here, in this uptrend, things were working out very nicely. But what happens when the market changes its environment? What happens when the conditions change? Well, this is where everything goes out the window. Remember I told you about 10 or 20 years ago, I was teaching and trading systematic behavior and systems that had results upwards of 500% going back 10 years. So each and every one of those systems blew up, meaning they lost everything when the market changed. Now, this was just this last, going into this last year, but I'm talking about 10, 20 years ago. So there is no consistency in that because you have to be able to edit and alter your plan when the market changes. We have a big Super Bowl weekend this week with football. I know not a lot of you may not be football fans, but there is something called an audible in football. That's when the quarterback goes up to the line. They already have a preconceived plan that everyone knows what to do. It's a play. But then when they go up to the line of scrimmage, when they go up out of the huddle, all of a sudden they see that the defense has changed, okay? So their plan may not work as well because the environment has changed. So what the quarterback does is he yells what's called an audible. So all of the players on his team know that we're altering things a little bit. We're changing the plan because the scenario has changed. That's what's the same thing what we promote in our courses. When the environment changes, you have to be a part of the process. You can't rely on something working the exact same way when it was easy, when things were going straight up. You have to have some input. You have to have a say. You cannot be a blind robot just blindly entering orders because it won't work. That's why we do not trade systems. This is why we encourage everyone to trade differently, because you have to be a part of the process. Now, when we were going up, sure, it was simple to make money, but let's see what happened when we had this terrible market at the end of 2008. As you can see here, U.S. stocks suffered the worst year since the 2008 financial crisis. So many people were losing money because the same systems and the same trading methods that made them money on the way up were not working anymore, okay? Well, guess what? When the market was going up, we were doing just fine because we were above the 50-period moving average. That's the only thing we were interested in. But once we had 2 to 5 closes below, we knew at this point in early October that the conditions have changed, that we are now in an overall downtrend, and that we should not be buying anything, that we're only going to be a seller. You see how simple that one rule is? That could have helped you tremendously if you lost a lot of money. You would have only been looking at the market from a seller's perspective. Now, on the way up, strategy number 9 generated a couple of nice signals. You could have used this as a directional tool. And on the way down, it generated 2 more nice signals. This is how simple trading can be when you get rid of this useless noise, the same noise that I relied on that didn't work for me 42 years ago. And I often say it's not about to start working now. So let's look at some different time frames, okay? We've looked at daily bars. I know not everyone trades daily bars. Let's look at a weekly chart. Now here's Netflix going back about 2, almost 3 years. Sure, it has a nice upward bias, a kind of stair-step approach, but who knew it was going to really take off? Well, it had that tremendous run-up coming into 2018. All we knew was that we were above the 50. And that's all you need to know. Now, the 50-period moving average does not predict how high something would go or how low something would go. It just tells you the right side of the market to be. So it's that simple. Now, while we were going up on this weekly chart, guess what? Strategy number 9 generated a buy signal down here in July of 2017. If you missed that one, not to worry. Another one was generated in December of 2017. All right. Had you taken that very first setup, 270 points potentially to the upside. How about a weekly chart of Snapchat? All right, the darling of IPOs. Now, I know a lot of you would never short something like this, or you couldn't even. But let's just say you were in the position and you didn't know how to get out. All right, you're thinking, boy, I've lost money, but what do I do? Do I hold on to this? Well, you could have used strategy number 9 as a point of reference to exit the trade. Because as we see here, once we cross below the 50 period, you could have used this little bounce, sold it right here, and saved an extra 8 points to the downside. How about a weekly chart of TRIP, TRIP, okay? We have a nice run up here. It looks like it's rolling over. But if we add the 50, we're still above the 50. And we actually had a couple of nice signals here. We had a nice buy signal in October of last year, quick 10 points to the upside, 2 or 3 weeks. And then another one generated here on this sell-off, a quick 6 points to the upside in the last 2 or 3 weeks ago. Here's a monthly chart of DVN. All right, someone would say, well, wait a minute, a monthly chart, how would I trade this? Well, there are a lot of leaps, a lot of long-term options you could have applied this to. Or if you were in this position looking for a place to get out and take a profit, because as we see here, this entire time we've been below the 50-period moving average on a monthly time frame. Each one of these bars represents a month, going back to 2016. A sell signal was generated in December of 2016, 15 points to the downside. Another sell signal was generated in December of 2017 in 1 month, 10 points. And another sell signal was generated in August of 2018 last year, a quick 20 points in 6 months. Now here's a 5-minute chart of the spiders. If you like to day trade stocks, the spiders, once again, we're not rolling over. We're actually still above the 50. So you wouldn't look at this as some type of top. You'd look at it as an opportunity to go long. Now on this sell-off, we have a nice buy setup right here, 8 points to the upside in the next 2 or 3 hours. Now, 8 points represented hundreds of points in the Dow. This is just a 5-minute chart. Let's look at some other markets because we know not everyone trades stocks, myself included. Here's a 4-hour chart of the euro-yen, all right? Now, here's what we mean, once again, by consistency. A lot of currency traders, a lot of our students who trade currency pairs like to trade the 4-hour chart. All right, well, where is price in relation to the 50? In the euro-yen, going back to the beginning of January, we were below the 50. Okay, so we're a seller. I don't care what the economic reports are. I don't care what you're hearing, what's going on in over the world. On this chart, we're only going to look at the euro-yen from a seller's point of view. We're not going to consider buying it. And we have a nice little bounce, which meets our pullback requirements. A sell signal was generated. And For the next 3 or 4 days, it went a little bit lower, but then it bounced up again. Now, if you didn't take a profit and you were still in the trade, you're starting to wonder, thinking, well, wow, I'm really not doing that well in this trade. But you would have got more confidence because look what happened here. We're just hugging the 50-period moving average, closed right below it, but another sell signal was generated. And as you can see, it finally kicked in, and you would have potentially been able to capture 825 pips coming into the first week of January, last month. How about a weekly chart of coffee? We know now we have a lot of commodity traders, and commodities are a great vehicle to trade when the markets turn negative. A lot of traders don't like to trade stocks. They can use our methods and our techniques in commodities because they work just as well. Wherever there's a trend, wherever you can apply a 50-period moving average, well, you can use our methods and our techniques. Now here we have a really sharp run-up in coffee. This was last September, all right, where someone would say, boy, you got to buy coffee. It's going straight up. We ask ourselves, where's price in relation to the 50? Even though you had a nice run-up here, you had greater consistency over time if you're in sync with this simple rule. So we wouldn't have bought anything. We would have missed this entire run-up, but that's okay because a sell signal was generated on this bar. And look what happened. It came all the way back down coming into the end of last year, 17.5 basis points. So you'll have more consistency being in sync with the overall trend as opposed to trying to fight it. Now that's a weekly chart of coffee. Let's look at a 30-minute chart of the Emini futures. This was just going back about 3 weeks ago. All right, we're above the 50-period moving average on this 30-minute chart, so we're only going to be a buyer. A strategy, number 9, buy signal was generated right here. And in the next 2 or 3 days, 65 points to the upside. That's over $3,000 per contract you could have potentially captured if you held on to the position. Some of our students like to say, Steve, I'll take a point, I'm out. Others would say, I'm going to stay in for as long as possible. It's up to you. There is no one right or wrong way to trade. The only wrong way to trade is when you listen to someone or something else telling you what to do. Now, specialist trading and pro trader strategies, we don't tell you what to do. We teach you the different variables and the different choices you have. But ultimately, the choice is yours, not ours. We're not here to tell you how to trade. We're here to teach you how to trade. Okay, so let's review before we go into the question and answer portion. Remember, strategy number 9 is a brand new strategy. We only have about a small number of people that have just begun to start trading it along with myself. It's a great, great method designed to trade pullbacks by using only 2 simple indicators. I just shared one with you right now, the buy-sell line, because that tells you whether you're going to be a buyer or a seller. As you just saw, you can apply it to any market, any time frame, and any direction. Now there is an advanced version, which I didn't go over here today, but it's an advanced version that allows you to trade options with it because it searches for those deeper pullbacks. So you can buy at a much lower price or sell at a much higher price, giving you more potential for profit. And this sometimes works better with option traders. You saw that we have some very nice setups here, but they're very consistent. Some trades were losses. That's okay. You're able to make them back hopefully sooner than later. That's what we mean by consistency. That's why we want you to paper trade first, because not every trade is going to be a winner. So we want you to get a feel or an understanding for this process before you jump in with real capital. Now, 2018 is over. We're already into the first month of 2019. Actually, the second month started this last couple of days here. So you owe it to yourself to start out 29 in the right direction. You don't want to start out this year the way you started out last year, frustrated and thinking, boy, I just spent $10,000, $15,000 on this course and it doesn't work at all. I wasted a lot of money. We have a great offer for all the attendees today. Time out of your Saturday morning. We want to give you a great discount. We're going to offer you strategy number 9 along with 1 year of our platform, the PTS Primo charting platform, where everything is pre-formatted, it's pre-canned, so there's nothing you have to adjust or add or subtract. It's right there, one click away, okay? All the examples you saw today were displayed by using our platform. Now you're going to get detailed video course, all the entries, exits, and stop placement, the entire course rules. This includes add-ons now. If you want to stick with your particular platform of choice that allows you to actually enter orders through, well, don't worry. We have add-ons for TradeStation, MT4, Ninja Trader 7 and 8, and Metastock, so you can download those. But obviously, I would say that the best bang for your buck is also including our 1 year of the PTS Primo charting platform. That's a $1,700 value, over $1,700 included in this special discount, okay? This also includes a scanner, so you can scan for nightly signals. Let me show you some other setups here, because normally this would cost you over $4,700. And don't worry, we're not going to charge you that. We're not going to charge anything close to that. We're going to discount it down to $29.95. That's over $1,700 taken off, okay, of this particular price. And most likely, because we're getting a lot of people asking, inquiring about it and wanting to sign up, we'll most likely be charging that in the near future, because we want to just give you the opportunity to be one of the first to trade this starting the new year. As we get closer towards the first quarter and the spring, we're most likely going to be charging this close to $4,700, even $5,000 for what you're getting here. All right. We're also going to include payment plans. So even for the discounted price of $29.95, if you can't come up with that sum, don't worry. For a small deposit, Pro Trader Strategies will work with you so that you can still be up and running and be a part of the strategy number 9 course with the PTS Primo charting platform. Now let me share with you some setups that happened recently. Remember I told you that we've had some nice correspondence with our students who have already signed up, who told us about signals. This was at the beginning of January, just a little month ago, okay? You're looking at CRON here. The stock is going lower. Most people think, well, this is Steve, this is in a downtrend. I thought I'm not supposed to trade or look for buyers in a downtrend. Remember, we always use the 50-period moving average, which will tell us what the overall trend is. And according to this setup, we're in an overall uptrend. We have 3 buy signals generated. So that's a cluster of buy signals using strategy number 9. And the stock has gone up 11 points coming into the 1st of February, coming into just a day or so ago. All right, 11 points in 1 month. We teach you all the different exit points. So you could have taken 1 or 2 point profit. You could have hold out for more if you wanted, maybe 8, 10 points, or you could still be in this trade if you wanted to. It's entirely up to you. Remember, Yahoo Finance reported in the beginning of April that Apple loses over $50 billion in market value after warning of rare revenue miss. Okay, terrible news for Apple, right? Most people heard that news and wanted to sell right on the opening after that came out. Guess what? Prior to that news came out on January 2nd. Prior to that, on December 31st, the last day of last year, strategy number 9 generated a sell signal, all right? Using any one of our different ways for entry, you could have entered into that trade either that day, the next day, or waited for a certain level to be hit. But either way, the stock dropped 16 points when that news came out. You would have been ahead of the game. Once again, someone would say, oh, well, you guys, you have research on fundamental news. You kind of did research on Apple's earnings estimates. No. We don't look at any of that. It's up to you if you want to, but it's not required. The market tells you just about everything you need to know. So why would you clutter up your trading and overcomplicate it by trying to figure out estimate reports, earnings estimate? I stopped looking at earnings 40 years ago. That's what my mentors taught me. And trust me, it saved me a lot of time and a lot of sleepless nights trying to figure out what the stock earnings are going to be, or the economic reports, or the jobless claims. It just doesn't matter. How about this setup in CMPR? This happened just this last couple of weeks ago. If you look at each and every one of these bars, these are daily bars, every one closed higher. As you can see on this candle bar that they're all opening and then closing higher. This is a very bullish sign, right? Any candlestick trader would tell you, or any technical analysis would tell you that that's very bullish. That means that their buyers are in control. Well, maybe, maybe not, because according to what I've been taught, the overall trend is down. And this is just a pullback in an overall downtrend. On the 18th, just a few weeks ago, strategy number 9 generated a sell signal using our aggressive version. And look what happened. 42 points in 2 weeks. Now, this just happened just a few days ago with this large gap down. Okay? Once again, some news or some report came out which caused that stop, but we knew that weeks in advance that you should not be buying this. And in fact, you should be selling this. Our members who had already signed up for a course were able to take advantage of this signal if they had traded this version of the strategy number 9. Do you think you could have done well trading this with options? You could have bought some puts and in 2 weeks made 42 points potentially. It's up to you. You may have done it, may not. You have the opportunity to make your own decisions with all of our strategies. 2018 is over. Once again, a year from today, you will have wished you became a member of this course. Why sit there a year later and say, gosh, I could have bought that course thousands of dollars cheaper. I could have even had a payment plan where I put a small deposit down and paid it off, in the year, where now it's like 3 or 4 times more expensive because it's such a great strategy. Take advantage of this great offer. Here's the information to sign up, or even just to ask more questions concerning a payment plan, or to ask what's offered. You can contact my sister site, which is Pro Trader Strategies. I've developed a platform with them. Remember, you get 1 year of the platform included with strategy number 9. Everything is one click away. You click on and you have the up and down automatic arrows, but we teach you in the strategy course what to look for. I would suggest calling them directly at area code 310-598-6677. If you have any questions concerning pricing or discounts, or you want to structure a payment plan, there's no obligation. They would be happy to answer any question. That link at the very bottom is the link that will take you to the sign-up page or more informational page, but it's not live. If you go to the chat box in the Go to Webinar column on the far right, a live link has been posted there. You can click that on. It will automatically take you. So now is the time to ask questions, and I promised you I would answer them at the very end. So I see here that we already have some questions. Jeffrey's asking, will this link be ready for replay? Yes, we will send you a link. So don't worry, we will send you a link, and you will be able to watch this at your leisure. But remember, this $29.95 along with a payment plan, if you want it, is for a limited time only. So I would take advantage of that. Let's see, can I trade Forex with this? Yes, I showed, maybe you asked this question before we went into the Forex section, but I showed you an example of the Euro-Yen on a 4-hour chart. Sure, you can trade. We have some students now who trade this with Forex on weekly bars. They also trade it on hourly bars. So it can be applied to any time frame, any market, and any direction. You just saw a great example. I believe potentially you could have captured 900 pips in the Euro-Yen just last month, okay? Let's see. I have strategy number 4 with a limited budget. What is the next best complement? Pet D, strategy 9, or other? I prefer to day trade later, may have options. Well, once again, the best next level is the one that makes you feel the most comfortable. Now, we have some people that swear by using the Pet D or strategy number 4 together. We have others that say, boy, strategy number 9 is the best thing I've ever traded. I don't want to trade anything else. It's really up to you. My suggestion would be, Ricky, to call up with no obligation, call up Pro Trader Strategies. They can work with you and they can help you. You know, I can't tell you what is better and what is not, because after trading for so many years, I know there is there's no such thing as what's better or what's not. The only thing that is what's better is what makes you feel comfortable and what works with your trading style. So if you like to trade pullbacks, strategy 9 is great. If you like to have a lot of signals and you like to trade breakouts or something close to breakouts, well, strategy 4 is more in line. If you want to confirm strategy 4, well, yes, you would need the Pet D. That is really great. The Pet D is not required with strategy number 9. So it's all up to you. These are all questions that can be answered by calling up Pro Trader Strategies. I don't want to tell you what's better or what's not, because first of all, I'm not a salesman. I'm only a teacher. And also, Pro Trader Strategies can work with you on discounts for all of these things that you're interested in, okay? Because you're already a preferred customer by purchasing strategy number 4. Robert asked, does it work with Emini day trading? Yes, it does. In fact, that's where I primarily use it because of my schedule. You know, I can't look at a lot of stocks and stuff because half the time I'm giving webinars or teaching or answering emails. And when I have a few moments to trade, I like to intraday trade. And I use it on tick charts on the E-mini. So yes, you know, firsthand witness here is telling you that I do use it intraday on the E-minis. It works great. Let's see, someone says, I've already purchased the Pet D. Can I pay the difference? Once again, if you have any cost questions or discount questions, contact Pro Trader Strategies. They're in charge of that. It's not like I'm trying to dodge the question. It's just that I am in no way involved with any of the pricing or discounts. That's their department. I'm just involved with actually the teaching and trading of the strategy. So if you're already a preferred customer, if you've purchased one of our strategies or methods, I'm sure Pro Trader Strategies will be happy to work with you, okay? Van is asking, what is the difference between strategies 4 and strategy 9? Very good question, Van. Once again, strategy 4 is not so much of a pure pullback strategy. I went into detail describing what a pullback method is. Strategy 4 is more inclined to buy as a continuation type of method. It looks for a trend. It's based off of a specific pattern. All right. Strategy 9 is not based off a pattern. It's based off of a price in its relationship to two indicators. Whereas strategy number 4 is based off of a pattern that you're looking for that is found all over the place, different markets, different time frames, but you have to find that pattern in order to have a signal generated. Now, many times that pattern is found in a continuation setup where you have a trend, it kind of stops and goes sideways and then it goes higher, all right? Or you have a pattern and it goes lower. Whereas strategy number 9 is different. If you have an overall uptrend, we're looking for a sell-off. We're looking for a complete sell-off the way I just shared with you, and we're looking for how price relates to these two indicators during that sell-off. If you have a downtrend, we're looking for a rally. We're not looking for any pattern. We're looking for a bounce, and then we're looking to see how price relates to these two indicators during that bounce. Okay, so they're entirely different. You have to decide, are you a continuation trader, where you like to buy high and sell higher, or sell low and cover lower, or are you a pullback trader, where you want to buy at a better price and sell at a higher price, okay? So anyway, these are great questions. Remember, any questions concerning teaching or trading, you will have my private email address. You can contact me once you become a student of mine, and I will answer these questions while you're learning to trade along with me, strategy number 9. If you have questions about discounts or about strategies that you've already purchased or techniques you've purchased and you like a discount applied to this, contact Pro Trader Strategies. That's their department, and that's what they can help you with, okay? As we conclude, this is a great, great strategy. I believe this is the last presentation before we go back up to the close to $5,000 price. So take advantage of this. Don't sit on the link that we're going to give you later today for a week or two and say, okay, you know what? I'm convinced I want to be a student of yours and buy strategy number 9 because that discount may be gone. So think about it. Contact Pro Trader Strategies. They would be happy to discuss it with you and fill you in on it, many more discounts if they have, okay? Thank you so much for attending. I wish you the best of luck as you look at one last disclaimer. And also, I look forward to all of you becoming students of mine in the new strategy number 9 course. Thank you so much. I'll see you next time. Bye-bye.